Good morning. I'm Andy Myers at Weiss Research, and this is your morning market update for Wednesday, December 7th. Jen Amos is off today. U.S. stock futures had been indicating a modestly higher start, but by the opening bell, the market had erased those earlier gains. Investor sentiment is taking a hit due to a report by Bloomberg News that Germany is rejecting a proposal to combine the current and the permanent bailout funds for the Eurozone. Earlier, the Financial Times reported that talks were underway to allow the €440 billion European Financial Stability Facility to remain in operation, even after a new €500 billion fund comes online next year. Even if that proposal falls through, investors are still hoping that EU leaders agree to aggressive steps to address the sovereign debt crisis at their summit in Brussels set to begin tomorrow evening. German Chancellor Angela Merkel and French President Nicolas Sarkozy are pushing for a new EU treaty that would include automatic sanctions for countries that violate the Eurozone's deficit rules and require member nations to amend their constitutions to include tough budget language. Ahead of the summit, the European Central Bank is expected to cut interest rates for the second time in 2 months. And if EU leaders agree to a tighter fiscal compact, ECB President Mario Draghi indicated that the central bank may expand its bond buying program to keep borrowing costs from spiraling out of control in Italy, Spain, and other struggling nations. Turning to corporate news, we're seeing some early losses in shares of Citigroup, down 2.5% right now. The financial giant said it's planning to cut 4,500 jobs over the next few quarters, resulting in a $400 million charge. CEO Vikram Pandit said the bank still expects to return capital to shareholders next year. But among the day's big stock winners is Martha Stewart Living Omnimedia, up about 35%. Penney is buying a 17% stake in the company for about $38.5 million. As part of the deal, Penney will create distinct Martha Stewart retail stores within most of its department stores. And we have a lot of news coming out of the telecommunications sector. Cablevision Systems is suing rival Verizon Communications, saying Verizon made false claims in advertisements for its Fios high-speed internet service. According to the lawsuit, the ad suggests Cablevision's competing service runs more slowly than it actually does. Meanwhile, Research in Motion suffered a legal setback regarding its next-generation smartphone. The phone was originally slated to be called BBX, but according to the Wall Street Journal, software company Basis International filed an injunction saying it already trademarked that name. Research in Motion will now call its new phone the BlackBerry 10. And finally, keep an eye on shares of Apple. Analysts at Stern Agee boosted their outlook for the company's fourth quarter results, saying that its iPhone and Mac computer production levels are strong. As a result, Stern Agee raised its price target on Apple stock to $500 a share. Apple opened at around $390 a share this morning. That's the latest from Weiss Research. Have a great trading day.